inflation is one of the most important macroeconomic parameter about which a government or the central bank generally is concerned. Inflation is simply the increase or the sustained increase in the general level of prices of a basket of goods and services. So when the prices are increasing, that is a concern for the consumers, for the people in the economy. Now in a democratic country wherein elections are there, for example our own country India, so if the prices keep on increasing, then the government can also be voted out simply because of the increase in price. As a result of which, it is very important for the government to keep inflation in check. Now the government alone may not be able to do it. It may need help from other organizations, for example the Reserve Bank of India, that is our central bank. Now that is exactly what to do or to maintain inflation in a acceptable limit. There is inflation targeting that we do right now. However, the genesis of inflation targeting can be seen in the Urjit Patel Committee, which is the committee that we will discuss in our committee series of Indian economy. So in this lecture, we will discuss about the Urjit Patel Committee that was established in 2013. Urjit Patel has been the governor of RBI as well. Right. So why was this committee constituted? What was the reason behind it? And what was the question or concerns that our economy was facing that we have to formulate or constitute such a committee? Then what recommendations did this committee give? How did we implement it? What has been the impact? What has been the criticism? And what is the current relevance? All this and much more we will see in this lecture in order to comprehensively cover Urjit Patel Committee. So let us get started with the lecture. First things first, why did India moved to inflation targeting? Now there are certain countries that do inflation targeting, and we also moved towards inflation targeting. Now what should be that target? All these things will be decided by Urjit Patel Committee, but we decided to move towards inflation targeting in round about 2013. Now the question is why we wanted to do so. Because there was a big problem that we were dealing with. Now what was that problem? The problem was persistently high inflation. Inflation was high plus it was persisting, that means it was not going away, and it was to the tune of 9 to 10%, means it was touching double digit as well, galloping inflation, right? So it was very important for us to target it and keep it within acceptable limit. Right, that was the reason why we wanted to move ahead to inflation targeting. However, should the RBI be given the responsibility of inflation targeting or not? Because RBI has a lot of other things to do as well. Maintaining the foreign exchange rate, the stability of the exchange rate, the growth also, the banking, it's a banking regulator, so on and so forth. So should we give it the responsibility of targeting inflation as well? It will not only add an additional responsibility, plus it will also be in conflict with growth. UPSC had previously asked a question that growth is usually accompanied by what? Growth is usually accompanied by inflation. So if growth is there, to an extent inflation would also be there. Now the RBI wants to facilitate growth and lower inflation. These are the two conflicting goals that it has. So that becomes a concern. Right, now to resolve this conundrum of whether we should move for inflation targeting or not, whether we should give this role to the RBI or not, we came up with formulating the Urjit Patel Committee. So RBI, it constituted the Urjit Patel Committee, and this Urjit Patel Committee is going to lead to the enforcement of, it did not enforce of course, the recommendation of inflation targeting, which we will see. Now before we move ahead, an important announcement with respect to the new batches that are starting at Legacy IAS Academy with a maximum batch size of only 40 aspirants. This small batch size ensures that personalized attention can be given to each and every aspirant. You will be taught by the experts in the industry. The new batches are starting from 3rd of August regular batch, and the weekend batch starts from 8th of August, plus there are multiple batches as well. Weekend batches are specifically suitable for working professional and college going aspirants. Once you enroll with Legacy IAS Academy, there are multiple advantages that you will have. Some of them are listed here. First is comprehensive coverage of syllabus. Then from my perspective, the game changer, if I have to say, it's the one-on-one mentorship, doubt solving session and regular interactions that you will have with the educators. Now, there will be maximum 40 students already told. At the same time, there will be daily mains answer writing practice, and there is also test series for both prelims and mains, which makes this course a one-stop solution for your entire UPSC journey. As far as current affairs are concerned, we have a 360-degree approach to current affairs, wherein the entire week's current affairs are covered through the live classes. In addition to this, we also offer the most popular optional courses. Optional is the most important decision of your UPSC journey. So over here we have the psychology optional, which has a very concise syllabus. PSIR, that's political science and international relation, which takes care of your entire GS2, international relations, governance, etc. That optional very famous, and anthropology, with probably arguably the most concise syllabus of UPSC optional is anthropology, and probably the second most concise is that of sociology. So the four most prominent and popular and most sought out after optional are present over here. So if you are looking to attempt the 2027 or 28, this is the right time for you to enroll in the batch, which starts from 17th of August. Right? If you want to enroll in any of these courses, you can simply scan this QR code or call on the numbers given over here. Now let's continue with our committee and understand what was the economic problem that we were facing and why was this committee needed. We will relate this economic problem to the requirement of the committee. First things first, as I mentioned, persistent high food inflation. High inflation specifically in food sorry, and fuel, right? Food and fuel, that means headline inflation was quite high. Your core inflation is what? Headline inflation minus food and energy, but here food and energy was very high. So basically your headline inflation was quite high. This is what was happening. At the same time, we were also discussing whether multiple objectives should be given to the RBI or not. For example, objective of economic growth, inflation, exchange rate stability, financial stability, so on and so forth. Because if there are multiple roles, then that may lead to lack of policy clarity and lack of emphasis, and diversification of role may dilute in the lot of areas. So that was also a question. And weak monetary policy transmission. Whatever policy rate changes the RBI brings in, it was not reflecting in the banking system of India. So when RBI would reduce the policy rate, the banks won't reduce their interest rates on the loans. So that was another concern, right? So stronger regulation was required, plus need for a nominal anchor. Nominal anchor means a nominal inflation rates that can be acceptable. And we also needed to follow the global trend, wherein a lot of countries and also including the developed countries follow inflation targeting. So to analyze all these questions in front of us, to address all these problems in front of us, we constituted Urjit Patel Committee. So now let us have a look at the committee at a glance. Now what was the official name of the committee? The official name was Expert Committee to Revise and Strengthen the Monetary Policy Framework. Right, so this committee is also known as the Committee for Monetary Policy in India. It was constituted in 2013. It was constituted by the RBI, very important to remember. It was led by Dr. Urjit R Patel, who went on to also become the governor of RBI. Right, during the formation of this committee, at that time the governor was Dr. Raghuram Rajan. After the committee got constituted, recommended later on, after the resignation of Dr. Raghuram Rajan, is when Dr. Urjit Patel became the governor. Right, at this point Raghuram Rajan was the governor here. Now objective was to strengthen India's monetary policy framework, and the core focus was flexible inflation targeting. means you are not targeting one single number that inflation should be 5% or 4% or 6%. No, you are targeting a range. That is why it's flexible, right? We'll see that number, what that number is, 4 plus minus 2%. So this was the committee. Now let us look at the key recommendations of the committee. Very first thing, it recommended that we will have flexible inflation targeting. Flexible means there will be a range that we will target and not a single number. And the indicator that we will target for inflation will be CPI, that is Consumer Price Index combined, whose base year has recently been changed to 2024. That is what we follow. Second was, it set the inflation target as well, right? Inflation target was 4%, but since it has to be flexible, so it has to have a range. So the range was, or the tolerance band was, plus minus 2%. As a result of which the entire range becomes 2% to 6% is what we were targeting, or what this committee recommended. And remember, CPI will be the indicator. So we started using CPI instead of WPI. WPI is wholesale price index, right? But it's the CPI that hurts or impacts the consumers, the last consumer finally, the household consumers finally. That is why we shifted from WPI to CPI to reflect the retail inflation, which also includes services. WPI did not include services as such at that point of time, right? Anyway, so CPI was added. Now, the Monetary Policy Committee, it also recommended the constitution of the Monetary Policy Committee, which will decide the policy rates like the repo rate, reverse repo rate, right? And it said that this Monetary Policy Committee will have the RBI officials as well as non-RBI officials or the external members, which later came on to be the government representatives, right? So by this involvement of RBI and external members, it will be a collective decision making and not the decision making of the RBI alone. Then single objective should be there for the RBI with respect to the recommendation of this particular committee, and that should be price stability should be the primary responsibility of RBI. And the main policy instrument which the RBI should use for maintaining price stability is the repo rate. Now, what is the repo rate? Repo rate is the rate at which the Reserve Bank of India loans money or gives money to the scheduled commercial banks of India for short term against approved security. Now, what are scheduled commercial banks? These are those commercial banks that are mentioned in the second schedule of the RBI Act of 1934. Why are they mentioned there? Because they are bigger in size, important, hence they are mentioned in the second schedule of the RBI Act of 1934. Further, it also talked about transparency. That means whatever decision the MPC makes, right, they should publish their decisions, their votes, by what vote they have taken the decision, as well as the rationale behind those decisions. So now every 2 months when the Monetary Policy Committee is meeting and whether they are changing or not changing the repo rate, they do mention the decision and they do mention the rationale for doing or not doing so. Next, it talked about the accountability. It mentioned that RBI should explain the failure to meet the inflation targets. See, the target that was set was 4 or recommended was 4 plus minus 2%. That means 2 to 6%. Now, if RBI fails to achieve this target, RBI needs to be held accountable. Accountable means you will not punish them or jail them, nothing like that. But the idea is accountability needs to be set. So, RBI should be explaining as to why it failed and what things it will do in the coming months and quarters in order to reach or achieve that target. That is how accountability is set. Then, greater RBI independence. So here the committee recommended that the political interference should not be there in order to give independence to the RBI. So these were the recommendations of the Urjit Patel Committee. Now let us see what was the government's response. So the government accepted the reforms. Monetary Policy Framework Agreement 2015 came into force. Now, government and RBI, they agreed upon inflation targeting. The RBI Act of 1934 was amended to include the legal framework to include the Monetary Policy Committee. Now, this Monetary Policy Committee, which was constituted, was to have 6 members. Out of this, 3 members will be RBI personnel, 1 will be the governor, another will be the deputy governor, and the third will be the person nominated by RBI. And 3 members will be the representative of the government of India. They cannot be the serving members of parliament, members of legislative assembly, or members of legislative council, or the serving bureaucrats. Apart from that, anyone else can be nominated by the government to be on the seat of Monetary Policy Committee. The decision were to be taken by majority since there are even numbers, so the decision can be taken as 4:2, 5:1, 6:0, assuming all people are present. Now remember, in case if there is a 3:3 tie with respect to voting under Monetary Policy Committee, then in this case the tiebreaker will be decided by the governor, who is given the casting vote. So in case of the tie, the governor is given a casting vote wherein he will cast the vote again in order to finally decide what way we proceed with, right? And remember, governor is not bound to vote in the same direction and as in which the governor has voted previously. Anyway, let's move ahead. So this is the current composition. I have already told 3 members of RBI, 3 members appointed by the governor. The government. They are external members. They cannot be MPs, MLAs, or bureaucrats. And inflation targeting adopted was of 4% with a tolerance of plus minus 2%. It makes it 2 to 6%. That is what was adopted over here. One more thing that you should know is the Monetary Policy Committee needs to meet at least 4 times in a year. That means at least once a quarter they should meet. The present frequency of MPC meeting is once in 2 months. So they are actually meeting 6 times a year. So that is well and good. Minimum requirement is 4 times a year. You can definitely meet more than that. Now, let us look at the impact of this on India. The impact has really been quite positive. Let us see that. First things first, it brought in more price stability in the economy. Imagine present situation wherein there is the Strait of Hormuz crisis, USA, Israel attacking Iran and Iran retaliating, the Strait of Hormuz getting closed, the ships are being attacked, the entire, shipping scenario was closed, or the transportation through shipping was halted. We did face some of the problems, but if you look at inflation, it is still well within control to an extent. So that has really helped historically as well, after 2015 as well, and even now it is helping. Greater transparency, because MPC publishes minutes and voting patterns, who is voting in what direction, in what way, what is the reasoning behind that. So they explain it very beautifully for the public to understand. Improved credibility is of course there. Better monetary transmission. Now the RBI is very clear, if it changes the repo rate, the banks needs to transfer those repo rate changes to the end user as well. Financial market development. Bond markets have become more responsive. If inflation is managed, then the investment will also be attracted, because you will have more certainty with respect to the future of inflation. Macroeconomic stability has also come because of the management of inflation, and improved policy coordination between government and the RBI, and the overall impact has led to stronger and more predictable and resilient macroeconomic environment in India. So we are presently having a very strong macroeconomic environment. However, there have been criticism and debates surrounding it. So what's the criticism? See, growth and inflation are conflicting in the sense that if you try to control inflation, the growth will reduce. If you try to facilitate the growth, the inflation will increase. So we need to maintain a proper balance between growth and inflation over here, because excessive focus on controlling inflation would slow down our economic growth. Next, Food inflation challenge. Now, Monetary Policy Committee tries to control inflation using the policy rates like repo rate. However, those rates are not efficient enough to control food inflation as such. So, for food inflation, the committee is quite ineffective or has a limited effect. Then the limited flexibility is also there. It is considered to be quite less because a huge portion of food is included in our CPI. However, with the recent changes in the base year, the percentage of food has gone down from 45.86% previously in base year 2011 to 36.75% with base year 2024. So that is a thing which maybe addresses this concern. Developing economic concerns. India faces structural inflation due to agriculture, due to logistics. There are certain things which are not in our control like El Nino effect, etc., etc. So the policy becomes quite ineffective or limited effect for that. Now, the supporters of this policy said that it improved policy credibility, stable inflation and better investor confidence. However, the critics argue that the growth and employment should receive equal priority alongside inflation because you are trying to manage inflation, growth and employment is taking a hit is what they basically argue. Right. Now, let us look at the legacy and the current relevance of the committee. So, this thing is being followed since then. In fact, after every 5 years, the RBI analyzes and basically reviews the MPC and inflation targeting in order to understand whether should the targets be changed or not. It reviewed it after 5 years in 2021. It reviewed it again recently in 2026 and has come to a conclusion that 4 plus minus 2% is a respectable and a good target. In future, we might narrow it down, but for right now, it is quite optimum is what its review has said. So, this committee has led to transparency, accountability, policy credibility and RBI's operational independence is maintained. Many people were arguing that there is involvement of the government representative which will take away the RBI's independence, but it is retained. Why? 6 people are there. If there is a 3-on-3 tie, RBI's governor has the casting vote, so RBI's governance independence is also retained. At the same time, since we are having current inflationary pressure because of externalities as well, conflicts around the world, it is playing a very important role. Global commodity price shocks, inflationary pressure, supply chain disruption. I gave an example of Strait of Hormuz, exchange rate volatility, right, as well as monetary tightening by major central banks. Monetary tightening means the major central banks are spending less and less and less. So under all these situations and scenarios, a lot of which are not in our control in this globalized world, Monetary Policy Committee and the recommendation of the Urjit Patel Committee and its subsequent implementation holds huge importance in the present scenario, and it is estimated that it will continue to hold importance. However, from time to time, there might be need of reviewing and adjusting the targets that we have. Thank you.